Good evening, everyone. Welcome to closing comments here for July 28th. Let's jump right into our charts and take a technical look at today's action. First up, we got our October live cattle on the board. We did see a nice little snapback rally today in this October live contract. Prices briefly rallying up there towards 223 before settling back into the close. Nice little snapback after yesterday's downside, though. We still see these front month contracts seeing that relative strength, while these back months in both live and feeder markets tend to lag here at the moment. But at the moment, we do see this market just kind of hanging out right around that prior week's range. We see a lot of back and forth action here over the last 6 to 7 trading days here. Wouldn't be surprised to see this thing continue to turn around between about 217 and 225. This market has reached some oversold levels. We are poking into this prior demand zone that kicked off this trend to start the year. So we just could see some nice back and forth here. We do have lots of resistance up here anywhere between this 20-day moving average and the 230 line. Lots of these averages going to be weighing heavy on price. So relief rallies are anticipated, given we have been visiting some oversold levels, but we're not expecting an easy climb out of here. We should see the sellers resume their selling pressure here if we do see a nice pullback up here between 225 and 230, but it's going to be a tough climb out of there for the bulls. We got a nice little downtrend shaping up. We should see some resistance in the event of a rally, but in the meantime, look to see some more wide daily ranges as we chop around here and see this cattle market try and find its footing. Next up, September feeders on the board. We did see this feeder market snapping back today after yesterday's pretty ugly finish. This September contract seeing a higher close today, but we can see as we look out here into these late months, these back months, late 26 into early 27, all seeing some more new contract lows, new yearly lows across the board here in these 27 contract months. More selling pressure here continuing to slip. While these front months are still remaining up here between about 326 to 336, we are seeing these spring 27 contracts knocking on the door $3. At the moment, this market still is hanging around in some fairly risky territory. Bulls are trying to defend the line here at the moment, but this thing's weighing heavy. Reliefs up, any sort of relief rallies up here into the 340s are expected to see some more resistance, similar to what we saw during last week's action up here in the mid 340s. These averages, we haven't really respected them a lot this year, but we still should be aware of them. If we do see price rally back up here between 345 and 350, we should see that resistance kick back in and see if this market can attack 333 once again. So far, though, good response by the bulls today, trying to keep this thing propped up on these front months. Back months looking heavy. Look for the downside to continue here. This downtrend still remains in effect. We could see a little bit of a relief rally here across these live and feeder markets at the moment, but the downtrend still remains in effect, and we should see these sellers get back into gear here. If they do get any sort of upside in the next couple days, sellers are in control, and we still should be pretty defensive here. Wait for this market to settle down, stabilize, and find its footing, and we should see some better days to trade in. Next up, December corn futures on the board. Today's action reversing most of yesterday's losses. We see this market finding its footing down here right around 471 after yesterday's low. We did see this thing snap back up into this area. So pretty similar action to what we saw back here this spring. As long as we remain above 470 here, we expect to see this 470 to 505 range trade. Look for this nice back and forth action to continue here for this corn market. Next up, crude prices continuing with some more downside today. Early action pushing this thing briefly undercutting $80, but so far here in the evening session, we are back up to 82.43 at the moment. Nice little snapback here this evening in this crude market after some couple days of downside to kick off the week so far. At the moment, we still remain below 87.5, so that's going to be the line to watch. If this thing is able to get back here above 87.5, we could see $90 to $100 come into play. But at the moment, this big sell-off we saw so far, we'll have to wait and see how this market acts in the days to come. But with this big sell-off we saw here to start the week, we should see these bears continue to try and push this market back down towards the $70 range. And next up, our equity markets seeing some mixed results here today. The S&P was kind of stuck in the middle here as it balanced out right around that 50-day average. The Nasdaq did continue to see some more lows today, even though it finished back here off of them just a little bit, right around 28,000. The Dow was the strongest of the bunch today, being up about 1.5% at one point. Nice rally back above that 20-day average. This guy is the new leader here at the moment, while the Nasdaq and these tech sectors continue to struggle. The S&P is just kind of stuck here in the middle of these two indexes, as it's a good mixture of the two. Nvidia still off here after yesterday's losses. We do have some big earnings reports to keep an eye on. Apple, Microsoft, Amazon, and Facebook all reporting over the next 2 days here. So this market will keep an eye on that. Be ready to see what kind of response we get from those. The market's response is going to be more meaningful than any sort of earnings numbers. So just be aware of how those names act the day after their earnings and what kind of results we get, response from the market. But at the moment, these indexes still weighing heavy here. The NASDAQ looking pretty ugly here as it continues to see some more downside below its major averages. Wouldn't be surprised to see this market get a little bit of a rally in the days to come, or during tomorrow's session. Try and lull you back into this thing while we wait for those earnings to come out. Like Google and Tesla saw last week, we had some pretty bad reactions to those earnings. So if that trend continues here across these mega cap names, look for these indexes that continue to roll over and see some more downside here. Just gonna have to see what kind of response we get from those earnings. But in the meantime, probably not a bad time to be reducing exposure as these leaders have started to fall off. There are still some selective spots out there to be putting money to work, but at the moment, the general market's starting to weigh heavy. Participation is weakening, and that usually leads to some more downside. So in the meantime, let's just be cautious here, be defensive. There'll be better opportunities to put this money back to work once these charts clean themselves up. But in the meantime, be defensive here as we await these earnings reports here in the days to come. That's all we got for tonight. Thank you everyone for tuning in. Catch you guys tomorrow.